Hi, this is Gerald Salenti. It's Wednesday, June 13th, 2018. And here are some of today's trends in the news. Well, maybe it's Friday the 13th because it happened. They raised interest rates today with the Fed and with a hawkish view for 2 more raises this year. So what happened? Well, before that happened, over there in Asia, the markets are up a little bit. Over there in Europe, boop, the markets are up a little bit. And then later in the day here in the States, boom, Dow fell down about 120 points, NASDAQ down. Oil's up a little bit because they say the drawdowns were bigger than expected. But yeah, they're just floating around here now, waiting to see what kind of action is going to happen June 22nd. When OPEC and non-OPEC members meet to see whether or not they're going to keep holding back that 1.8 million barrels per day or increase production. So, we're just in a flat line there in gold. Well, what a surprise. Gold prices went down on a more hawkish view that the Fed was going to raise rates. The higher the rates go, the higher the dollar goes, the lower gold goes, unless, of course, there's a wild card event. And, by the way, I believe that guy Mnuchin over there, the Treasury Secretary, go back to January. He said the United States was in favor of a weak dollar. Phew! Dollar went way down. But since that time, the dollar's gone way up. And I thought he was for real. But you never know. So, that's about it on that front. What does it all mean? Has this Trump bump in the rally ended? Are tariffs and trade wars going to change the market direction? And how about those emerging markets, huh? Because you know the story. That's right. They're very deep in debt. The stronger the dollar goes, the lower their currency moves down. And they got all that dollar debt, and they got to pay it with more of their currency. And we're seeing the emerging markets already in correction territory. What will happen next? You want the answer? You got it. Trend alert. Trend alert. History before it happens. You got your trend alert long before today the Fed announced they were going to raise rates and what to expect. Right on target. Here's even what we wrote. And should the Fed aggressively raise interest rates, not only will it put more downward pressure on emerging markets, it will push U.S. equities lower. Also, aggressively rising interest rate hikes will push gold prices lower as the opportunity cost of holding gold increases. So we call it like we see it. We don't have an investment that we're pushing forward other than the one big investment, history before it happens, trends that are ahead of the news and on top of the trends, and mostly important, for you to think for yourself. And you have all the think for yourself information that you could want with trend alert, new Trump bump, or will tariffs and trade wars sink markets? And there's a lot to this, and we go into it. Again, we're talking about the dollar and emerging markets. Well, how about this market, the Chinese market? Story on the back page of today's Financial Times, very interesting. Dollar debt leaves China companies vulnerable if Fed tightens further. Now remember, this is the if, and they are now. It goes on to say how many real estate companies are very heavy in dollar debt. Property companies have become the biggest dollar bond issuers, and when you look at the numbers, the amount of Chinese corporate debt sold in dollars has risen sharply and is now above the 2014 peak. And again, A lot of this money is in real estate. Real estate assets account for 54% of household wealth in China. Only 41% in the United States. China's largest property companies have been on a tear. Shares in Evergrande, for example, have risen almost 400% since the start of 2017. Imagine that. Up 400%. You ready? Helped by the company buying back stock in the period. At the same time, Evergrande's total debt is $120 billion, with almost half due within a year. Oil price rise promises unrest in emerging economies. Again, you're looking at outflows from the emerging economies. You're looking at one currency after another hitting multi-year lows or new lows. They're in economic distress already. What does rising oil prices mean when you're already deep in trouble? So again, depending on whose numbers you look at, oil prices are up between 60 and 70% this year. Depends on which oil you're looking at. So, have wages gone up that much in the United States? No. Have they gone down in other countries and emerging markets? So what's keeping the markets going, and what will happen with these interest rates as they go up? You know what's driving the markets. We've been saying it over and over, and the facts are there. Stock buybacks, record highs, $50 billion already this month, and merger and acquisition activity. AT&T just got the okay to merge with Time Warner for only $85 billion. Comcast bidding on 20th Century Fox, only $65 billion. And you think the news stinks already and you're only getting a tiny bit. The more they merge, the less you get. And that's why you subscribe to the Trends Journal. We give it like no one else gives it, and you get it from us that you can't get anywhere else. The facts are here. So, staying with what's going on, interest rates going up. Here's another one for you. Let's put it together. Consumer prices post largest annual growth in more than 6 years. Have wages posted their largest annual growth in 6 years? And now you have to pay more interest on everything? And how about housing, huh? Yeah, well, not building a lot of lower priced housing that people can afford to buy because they don't have good jobs. And there's another reason why. Construction costs soar in May. You keep getting it over and over again. The squeeze is there. Construction costs going up, mortgages going up, inflation going up, costs going up, and you're making less. So, going back to China, what are they doing? They keep greasing it, man. That's right. The People's Bank of China pumped $20.3 billion into the market for reserve repos, leading to a net injection of 70 billion yuan. This followed a net injection of 30 billion yuan on Tuesday. There you go. Cheap money. Tomorrow, the ECB meets. Will they end that quantitative easing scam that they've been pushing through all these years? Looks like they will. What effect is it going to have when less cheap money flows in? Well, less merger and acquisition activity, and we forecast lower markets. Yes, they may go up a bit more, but the Trump bump, as we see it, has peaked. And what else do we have here? Well, when all else fails, they take you to war. Netanyahu embroiled in 3 corruption scandals. Israel's Prime Minister Benjamin Netanyahu has become embroiled in yet another scandal. The Likud leader was questioned yesterday by police in connection with an investigation into alleged corruption. Yep. That's Financial Times is the whole story here. When all else fails, they take you to war. So watch what goes on in the Middle East. Because if war breaks out over there against Iran, watch oil prices skyrocket, gold prices will reverse, and the markets will go down lower. And on to some other news of interest. In the peaceful United States of America, U.S. weighs expanded role in Yemen war. This was Monday, June 4th, last week. Today, U.S. to deepen military role in Yemen war. And we, the little people of the United States, we're about 99.7%, don't even know where Yemen is or ever heard of a Yemen. The worst humanitarian crisis on earth, started by the Saudis and supported by Obama and Trump, slaughtering innocent people, is now getting a lot worse. And then when they retaliate after you destroying them, it's terrorism. It's terrorism. It's payback. But we'll forget that. And again, no one's talking about this. You won't find this in any of the media about the United States escalation and really the seeds of what sowed it and how the United States has been involved in the murder of all these innocent people and the destruction of an entire nation, the poorest nation in the Middle East. Trump and Kim hail new future after historic Singapore summit. Critics point to North Korean propaganda victory. What critics? Morons. Isn't it better than nothing? Isn't peace and talking better than war? No, not if your name's Clinton, not if it's Obama, not if it's Bush, not if it's Samantha Power or Susan Rice, Condoleezza Rice, or what goes down the colon crap, Colin Powell, or Dick, oh, I know, I have to be proper, Penis Cheney. They love war. So, U.S. to suspend war games with South Korea after Kim summit. And all those little Democrats like little Chucky Schumer complaining, we need a better deal, we need a better deal. It's the beginning of a deal. Shouldn't people be happy with that? Well, no, because Senator Lindsey Graham calls for war in Korea if Kim doesn't agree to complete denuclearization. That little boy of nothing. As you know, Lindsey, did you come out of the closet yet, Graham? The boy that couldn't fight his way out of a paper bag, calling for more war. So, on one end, of course, I call it like I say it. I applaud Trump for what he's done